Next guest is truly living his version of the American dream. He grew up in a modest household, paying for college by selling circus tickets over the phone. But some huge bets in real estate helped change his life forever, both against and for. With a net worth now of about close to $2 billion and a slot on the Forbes list of top billionaires, we want to know, where is his next bet? He's got several places, and he's sharing them with you exclusively here on Fox Business. Billionaire investor Jeff Green. You're always talked about as the guy who first traded credit default swaps. Tell me how you view the real estate market now when we keep seeing that prices continue to fall and bottom, and we don't see any turnaround here.
Well, look, Liz, there was such a huge overhang for so many years of overbuilding, excess amount of construction, that you cannot, it's not going to just be picked up just like that. I think that the problem now is, there just isn't. The problem now is that there's, the expectation is that there's going to be a certain date, like when real estate will get better. But I think what's going to happen is we're going to grind our way through this inventory. I mean, the truth is, like for housing, there's 3 million new Americans every year. So, another few years there's going to be another 10 million Americans. Well, look, even if 10% are unemployed or 9% are unemployed, the other 91% need to get housing. And so eventually all of these homes will get purchased, and all the foreclosures will go away, and the housing market will recover, and that'll be good for our economy too, because it'll create a number of construction jobs.
You bet against all subprime mortgages, and that's how you made your big billions. How do you feel about real estate investment right now? Are you for? What, are you pouring money in? Yeah, I mean, I've made my first real estate investments during the last year, and first in 7 years, because I think we're turning the corner. I mean, look, I'm based in Florida. Florida is obviously ground zero for the real estate bust. It's a mess.
Yeah, it's a mess. And every year you think, 2 years ago everyone thought they were stealing things at half of replacement cost, and now they're at 60% of 40% of replacement cost. But the truth is that at some point, all of these homes will get bought, and there'll be new construction, and the market will come back. So I think that condominiums will do better, rental housing will do better, commercial buildings will do better. Because look, it's very simple. People are going to look back on today as being the golden day. Anybody who doesn't buy today is going to think, why didn't I buy in 2011 when I had these crazy low interest rates? Buy properties priced at a third to half of replacement cost, so now's the time to get in.
You bought a hotel recently in Florida that was distressed in a way. What else are you looking at? Are you looking at plain vanilla condos and housing in Florida?
Well, we acquired what's called a fractured condo. It was a condominium building. Give you an example. It was 360 units. 100 had been sold at around $250,000 average per unit. We bought the other 260 at $75,000 a unit. Now we're renting them out. We're getting a cap rate or return on our investment of over 9%. And I think that ultimately those will be worth $250 a unit again. It may not be in a year or two, but 4 or 5 years. Look, real estate is cyclical. It's long term. You can't be thinking what's going to happen 3 months, 6 months from now. You have to be thinking what's happening 3 years, 6 years from now.
Okay, tomorrow, the next couple of months, will you buy more?
Absolutely. On the right opportunities, I think this is an excellent time to be getting involved. Interest rates are lower than they've ever been.
So that's your view on real estate. Have to get your view on another investment that we were at this Anti-Defamation League dinner, and I'm sitting next to him, and I'm thinking, well, what's your next big bet? And you said tobacco bonds, that you were investing in tobacco bonds because the yields were so good.
Yes.
How does this work? So that can the average investor do this?
Absolutely. They're available in very small denominations. This is no institutional trade like subprime mortgages. Anybody can buy them. And what kind of happened when I saw you was, with all the negative publicity on municipal bonds in states and counties and cities having problems, people bailed out of all tax-free obligations. And so what would happen is tobacco bonds went to the point where they were yielding at that time 9, 10, 11%, right, triple tax-free, and they're rated, double B or better. And now I think today where they're priced, 8.5%, you can buy the tobacco bonds of California, New Jersey, Ohio, and there's a lot of research available from any investment banks.
We just threw up these Golden State. Here's a 5.12% yield. Look at the Golden State bonds down below, 5.75. Buckeye Tobacco Assets, which is the state of Ohio, and you've got, I guess, after taxes about 7.62%, and then you've got the New Jersey yield of 8.26 after tax.
Yeah, I think those are the yields on the bonds, but they're priced much lower than they're not priced at par. So I think that if you're actually pricing on most of these bonds today are really in the 8s. So the after-tax yield's in the 12, 13%. Some people have a moral hazard. I mean, I thought about it myself. Do you really want to hope that people smoke more cigarettes so you can make money? But the truth is, the way these are priced, they're priced with the assumption that we're going to have I think 3% per year decline in cigarette consumption, which I'm happy for, for America. And if that happens, the bonds will still do just fine.
You're still getting a decent yield, way better than, for example, a CD at your bank, right?
Yeah, well, look, there's lots of things you can do today besides CDs at banks. I mean, you can buy preferred stock in Bank of America and make, with the Q bond, the Q preferreds, which are taxed at the 15% dividend rate, are paying 6.5% today. Nobody thinks B of A is going bust anymore.
We were asking you for your stock picks, and you have some pretty popular ones, like, for example, Apple and position there. But Wells Fargo is something you're looking at right now, and Citibank. What do you like about Citi?
Well, I mean, look, if you look at their book price to book value, it's excellent. If you look at their capital, it's excellent. I mean, they're just really, and they're franchises all over the world. I mean, it's not just Citi, Bank of America, Wells Fargo. I mean, these banks, when this economy does finally kick into gear, which will happen, these are all going to be, big earners. I think these stocks are going to be priced much differently than they are today. I should throw J.P. Morgan on there too, because it fits in the same category. They just, they've just bought the best businesses in the world.
On a down day, are you buying these names?
I'm already pretty well invested actually in the financial sector personally, so I'm not adding to it, but I would be if I wasn't already there.
As we finish up, double dip recession. People are down on this country. They worry about whether we'll raise the debt ceiling and all that's going on inside the Beltway. How much credence do you put into the worry that's there?
Look, I am extremely worried long term. I think that where we're going with the race to the top, race to the bottom, not taking care of people with their basic needs and providing jobs for Americans is a big problem. In the short term, we're a cyclical economy. I think we're going to work our way through this period.
Jeff Green, billionaire investor. It's what his card just says, Investor Jeff Green. It's great to see you. Thank you so much.
Thanks for having me, Liz.
We appreciate it. Come back again.